Hey everyone, just doing a quick sound check. You should be hearing me just fine. Okay, folks, we'll be getting started here in probably about 2 to 3 minutes here. Just have a couple things to get ready, and then we'll be ready to start. Looking forward to today. Welcome everyone. Just a few more minutes. Hey Joe, hey Jay, I'm not logged in as as an admin, so you're in charge of all the trolls today. Hey Steve, welcome. Jonathan Klein, welcome. So just checking if sound. Give me 1 minute. Got to get the Runa and ready to go then. it helps if you have the camera on you. Good morning, everyone, afternoon, wherever you are. And got a lot to talk about today. I am going to discuss some of this reopen trade and where I think we are on some of these things. And it's just it's an interesting world that we live in, to say the least. We're seeing still a lot of dislocations in certain areas of the economy. They're not healing in some cases at all. In other cases, they're doing much better. One of the things that I'm going to discuss today is I think there's still a big piece of this energy trade. You can talk about electric all day long, but fossil fuels are still in play, and they're going to continue to be in play for a lot of years. For what it's worth, I think it was Morgan Stanley or maybe our friends over at Goldman were saying that it was going to be year 2025 before you see electric become dominant. I think there's other issues. I won't go into a lot of details, but I think battery storage is still a major issue out there. And I've been looking for some technologies that we could possibly play in, because I think that's going to be your big play in electric is battery storage. Tesla's pretty played out, but there's going to have to be other areas to look at. And so I'm looking into that stuff, doing some research in the background. And I think it's going to be fairly exciting. I also mentioned in last night's video that I was going to talk a little bit about this infrastructure situation. And for the most part, everything we've seen so far, I just want to say this, is been all rhetoric. There's nothing real. There's nothing been passed. The $2.2 trillion has not been passed yet. It's just all talk. And we'll see what portion of it they end up getting. It doesn't even look like a straight shot, even if the Democrats go nuclear and try to control everything. They're still going to have a lot of wars, and I'm not sure they've convinced everybody that this is the way that this bill is the right bill. So we've got some considerations there, and I think that's why some of these stocks, I talked about this last week, that the clean energy stocks and other plays aren't really in vogue just yet. In fact, we're still seeing some selling in a lot of these issues. So this is just going to be a continuing saga that's going on. And, I think I'll try to switch over here and just talk a little bit. I don't think I'm going to get into a big rant today as we start the show, but I believe that there are some, as I mentioned a minute ago, some major energy plays still out there, and there's a lot of rotation here. I'm looking at crude oil, and there's a lot of upside, and I'll go through that here just shortly. That will be the front end of my analysis today, because I think that's where, like I said, there's still a major play there, and it's not going away. And as the planet continues to come back into somewhat normalcy, if you've got such a crazy view depending on what you watch on your computers or your television set, it strongly, I think, slants you to some opinion of the world and what's going on. So you can even scare yourself. You can try to be diverse in your views, but it almost anywhere you go, it becomes scarier by the moment. And especially when you have anarchists and people that just want to disrupt everything, you can't make them happy. They're very unhappy people. So you have that element. But when we look at the economy, things are going to go ahead. It's going to be interesting to see the claims numbers that come out tomorrow. The expectations have been downsized to about 570 filing versus the 700 to 800 that we were seeing for some time. And that appears to be downsizing. You guys know I've been focused on this continuing claims number, and I don't really care about it until it gets under 3.2. And once it gets under 3.2, then I think that's going to slant everything toward more employment, and a lot of folks are going to come back to work. And that leads me into a comment that I made a couple videos ago, where I believe that the end of this unemployment situation, where there's a 1 year, if you've been on it for a year, that you won't be eligible anymore. I believe that's going to be that's going to have a huge impact on people going back to work. And I think a lot of those folks that have been out of work have been hesitant to go back if they have some money going on. Maybe they've got a side gig they're doing. But I think when that runs out, they're going to be forced to go back. And I think a lot of those folks are in hospitality and restaurants and those type of things. I know that I talked to a local restaurateur and they said they're still having trouble finding people that want to work. So that's still happening. And I think as the vaccinations and everything start to go, people will just come out more and more to the point where you get like Florida and Texas and Arizona, by the way. It's just basically no one cares anymore. They're just out living, and that's the way it's going, at least in a number of states that I'm aware of anyway. So anyway, I see I just want to look at the timeline here for a second and just try to get things set up so we can start to talk about what's going on in the markets right now. And I'm just trying to summarize what's going on. I don't really have a big agenda today on this opening comment. So we'll go ahead and start to dig into the technicals and take a look and see what's going on there. And you know, the futures are up 29 handles right now, you can see, and this is, I believe, a significant event from the standpoint we're back above that 10-period moving average. I talked about this, and I think probably one of the hardest jobs that I do every night is trying to come up with trying to come up with a thumbnail for the video, right? So what did I say? Is there any relevance that is going to go on? And for the most part, will the market stall thing, I still think there's a lot of overhead resistance, and I think we'll continue to grind in a sideways range. You know, yesterday down, today up. We did get a minor STX buy on the SPX, so STX and SPX. So S&P got a STX buy signal, which we basically have went a little bit beyond where I thought we'd go. I thought we'd see us go into that R2, R3 handle, and I just want to bring that up real quick so you can see what's going on here. So R2 is 38.52, the high 38.60 today. So the next level, R3, I don't think we're going to get to would be 38.73. So let me make sure I'm on the right one. Here we go. Let's try this again. That was the wrong day. Okay, so 41.57, the high 41.56. So we went right to an R3, and the RXT is 41.66. So I don't see us getting above that number. We probably have played this thing out for the day. We'll see how we come into close as we go through the show. What I want to point out here is on the, let me go and zoom in on some of these PPMs here real quick. But this is, as you look at the PPM 1, you'll see that it's at a 0.20. This is the futures. But you can see PPM 2 is turned up nicely, and this is a significant move from the standpoint of the momentum shifting back a little bit. But what it tells us is that the sideways range will be limited to this downward pattern that I talked about last night. The 21-day moving average is 40.57 right now. It's coming up at about 10 handles per day. So that's just going to keep crawling under until we get right up to 40. I mentioned the the key numbers on the short-term charts right now, 40.96 to around 40.76. That would be the extremes. With this bounce back that we're getting today, that number probably won't even come into play. We'll be lucky to get below anything under what's currently an S1, S2, which is 41.17, 41.06. So 4100 is probably going to end up being a substantial bottom of this particular sequence right now. And what we should see, if we manage to keep most of this strength into the close today, looks like we probably will. But if we do that, then we're going to see the market grid turn up tomorrow, and we're going to see potentially more acceleration to the upside. So all of a sudden, it's not going to be that hard to get above the high at 41.83 was the high in the futures. Let's go over to the SPX. And similar numbers here. The high in 41.65, RXT 41.65.51, the high of the day 41.65.06, and so that's right where we topped out. Last trade is 64, so we're trading right at the highest levels of the session right now. And so same situation that we see on the futures. PPM1 is at a 0.25, and we can look at hey Donald 190. I think you just super chatted. Thank you. Let me zoom in on this number here just so you can see these numbers. But this is the formation that we're seeing here in these PPMs are very they're still bullish. On a short-term basis, they're telling us that this is likely to be a consolidation range. When we start to go to the next levels and we go up to a weekly chart here, then what we're going to see is the weekly coming into a potential acceleration. We're at a plus 0.58 on PPM1, PPM2, 0.65. So if you haven't been around the channel before, these PPMs stand for price pressure momentum. PPM1 tracks the 10-week simple moving average, PPM2 the 21, and PPM3 the 40. And what this tells us, and you can see this on the screen here, is the trajectory or the angle of attack. Many people use trend lines, which I don't like trend lines because they're static and I draw them. So I like moving averages. Been using moving averages for more years than most of you have been around. So I started focusing in on these in 1983 and 84 is when we developed the PPM indicators and when we determined which moving averages to use. But I want to draw in something just so you can see exactly what I'm talking about here. And this is an important element of the analysis that I do. And this is, I'm extending out these moving averages. So this is the trend. You see it, you look at moving averages, but this tells us that we're going to continue along these lines. So all of a sudden, not too far out in early May, we're looking at right where we're trading right now would be the 10-week moving average. So we can oscillate in a sideways range. This average is going to continue to rise up. And what ultimately will happen is we will get another acceleration. And I know I've showed this to you folks a lot, but I just want to point this out again because I've talked a lot about the momentum precedes price. And when it comes to these PPMs, this is an important element to understand. And let me show you what I mean by that. Sorry if you've seen this before, but I just want to point this out again. But this is what's happening with this market right now. These are the three momentum surges, and they happen in different locations in the trend. And what they do is they set that momentum. So we get into this first indicator it comes in and then it goes in a sideways mode. Same thing here, it comes in, goes right into the moving averages, goes sideways. Now what we're working on here is going into the trend mode. So what this tells us is that we're a ways away from completing this trend. And I will show you, and this is where our WaveTech database that we track 16,000 symbols comes into play, because this is the difference in perspective when you can watch that many symbols simultaneously, start to build statistics and probabilities around what is likely to happen based on a lot of trends, not just a couple trends, not just looking at these indexes and going from there. So this is what's going on. So this trend is right now total trend maintenance mode. This particular sequence has been going on since around November of last year. So November 2020 is when this trend became very relevant, and we've been operating along this. If you're a regular watcher of my channel, you know I've been talking about this 10-period moving average being the demand line, and you can see the markets just moved along that line. Let me clean something up so you can see that just a little better. So I take off, you can see here the red line is the 10-period moving average, but that has been your primary line. We get a little bit below it, but for the most part, we've only been below it, I think, since November 3 times. And so that just shows you this pattern that continues to evolve and how this trend works. So this is an important part of just looking at moving averages when I take off the market grid, so you don't have that laying over the patterns here. So, all right, so let's go to a monthly. I just want to get to a long-term view. We'll go through. It's interesting that the monthly SPX is trading virtually at its extreme already. 4207 was RXT for the month. We've already printed up there. The high's been 4191, so we're almost right to the RXT. You can see we're just below it. But the same trajectory that I was just talking about on a monthly basis is absolutely huge. These lines, the 10-month moving average is straight up. It's going up at 3% per month, and this is anything over 0.25 is a trend. So this is a monster trend, and it also doesn't bleed off very quickly. Even if the market stalls here and went sideways, you could go sideways for probably 3 months before we'd get anything. I guess, of interest that we could even think about any kind of minor correction. So the ranges, and when you look at just at the pure range here, let me zoom in on this so you can see this. When you look at just the pure range for the month, you're looking at basically a 500-point range on the S&P being generated. I suspect that will continue. We're a little bit. We've got about roughly 10 days to go in this month, probably about 8 trading days. So we're looking at this thing turning up even further for next month. So the high-end projections will continue to be about that 500-point from center. So wherever we close in 2 weeks, we'll have you can take roughly about 500 points. The current volatility suggests it's about a 500-point range that is being projected. So that will be your upside. Upside will go up. So if we were to close right where we are right now, we're looking at next month seeing numbers up around the 46 handle. And I've talked about the objectives that we've seen here as well. So I'm going to go through that. Just most of the analysis that I will do is on the S&P, but I'm going to put up here I'm going to put up the Fibonacci projection tool. Now this goes back, this projection happened back on 10/23/20. So last October, these numbers have been out there. I did a video back in October talking about the potential for us going to the upper end of this targets. And if you can see here down below, let me zoom on that again. I'm sorry, I should have already had this out. So let me show you again. So here is the projections right here. So back on 10/23, the projections for the upside were 4605, 5100, 5468. So this was the Fibonacci projection off of this pattern. This is a tool that I developed back in the 1990s, and it looks at patterns and determines the range expectation. So we're seeing the minimum range now 4605, and just what I told you, just off of the market grid, we could start to see some numbers very close to the 46 handle for the month of May. So this thing is going to move along the lines a lot quicker than you think. And the other thing is, as long as you keep hearing all the bubble talk and everybody talking about the end and the market's going to roll over, and Ray Dalio telling you about market cycles and debt cycles and all this stuff that it sounds very intellectual, but it'll do nothing for you when you're investing. You can fade that guy like never before. Having been a big fan of Dalio for many years, he's just become I don't know what to say about him, but he's basically, if you want to know what's not going to happen, is listen to Ray Dalio. That would be a good place to go. He's actually painted himself in a corner, like I've seen a lot of guys do, and that's something I try to avoid. I'm not a perma bear and I'm not a perma bull. So that's one of those things. So as far as these patterns go, though, these are very substantial, and look, the probabilities, because of these rate of changes that I just talked about on the monthly, it's a very high probability, an upward of 60+% that we're going to see 4605 minimum on the S&P. And I've talked about this before with, if they do get this 2 trillion passed and we start to see this money flow, I think they're going to jack this market way higher than you ever thought it would be. So let's go over to NASDAQ and take a look there. I want to back up to the daily before I talk about this chart here. The daily ranges were basically met. 14,116 back on 4/16, and we got up to 14,059. So we got almost up to the R1 level that day. But this pattern that we're seeing here, the projection. If I go down just a little bit, you'll see the projection of the Fibonacci projections, 14,116. And so we did get to 14,059. So we came very close to that. This is where we backed off of. But as far as the trend goes on a short-term basis, we should stay between, if we can get back over the 10, I mentioned this in last night's video, 13,796. If you can get above that number, then and stay there, then we'll start to see the market grid turn back up. We'll start to see some trend start to form, and we'll see acceleration in the PPMs. Until we get that, we're going to stay somewhat sideways, most likely between 13,875. We're 13,876 on a high. Right now we're at 61. So we're going to stay between this 10 and 21 period moving averages for a number of more days, I think. If we get above 13, I'm not saying we can't get above this level. I'm saying if we get above 13,875, the market grid will turn up. We'll see the PPMs turn back up, and then we'll resume this trend. And the trend, all we're seeing here is a little minor sideways consolidation. There's nothing major going on. This market's not rolling over. We'll see that when we go to this chart here. When we get to the weekly, now we'll start to look at some of these Fibonacci numbers as well that are being calculated. And I think those are significant. 15,156, 16,286. So we're talking about 16 handle. That's 3,000 point move. Excuse me, 3,000 point move on the NASDAQ, but the min is going to be 15,000. So a couple thousand points on this market is highly likely. Excuse me. So as we look at this, let's go up to the monthly graph here, just so we can get this perspective. And this is important as well. Just like with the S&P, we're seeing us get very close to the extreme. The high so far this month is 14,059. RXT for the month is 14,245. So we printed back up. We got a reversal last month. Same trajectory type scenario that I painted in the S&P. You're seeing on monthly, these are just vertical numbers, and we're just not going to see this market come down. If you did see anything that looked like 12,328, you could buy this thing blindfolded. That would be your ultimate buy the dip. We actually got that, pretty much got that last month when we traded down to the low of 12,197, because we just got short of the 10-month moving average then at 11,958. So this number is going to drive the markets, and it's going up right now at about, looks like about 400 points, 380 plus points per month right now. So that number, as we come into the 1st of May, is definitely going to be like 12,600. And and it's just going to continue to be the major, this is the major demand point. And this came into play when we closed above this all the way back on 430 of last year. And if you go back and watch some of the videos I was talking about, especially in mid-May, mid-March and early April, these projections were starting to come out, and it was just insane what I was seeing. It seemed impossible at the time based on what was going on. So, I'm just, this thing, it's almost, I just come on screen here for just a minute. It's almost like it's hard to explain when you're doing this type of objective analysis. It's sometimes you see things. A matter of fact, in Elliott Wave, I think Elliott, one of his original papers back in the 30s, I think it was, he said the hardest thing you're going to have to do is to believe what you see. So when you do these type of analysis and you see this stuff, it's very, very difficult to sometimes to state, because people like, especially now that there's a channel, like this, and 30,000 subscribers roughly, and people are, it's 2021, and everybody sort of wants you to be wrong to a large degree, but the reality is it's very hard to believe in anything anymore, especially with the internet and YouTube and all that stuff. But this analysis, when you do this type of stuff, is really difficult to project and with confidence. I tell you these things, and I will, I've got the trolls out there say Bob Kendall never takes responsibility when he's wrong. I don't know how to explain this, but it's not about, when you're doing this stuff, for all of you, it's being realistic and following the rules of what you developed. If you're lucky enough, I've spent a lot of years developing these rules. I've been using the same rules that you're hearing. I actually found something from I believe it was 1990, and I'm going to see if I can extract this. It'd be really interesting. It was a presentation that I did, and it was like watching my YouTube channel. Okay, right now, just same analysis. This is what I've been doing for a very long time. I could tell everybody I'm a one-trick pony. I know this particular methodology. It's methodology that I developed with myself and a colleague, and I took this strategies to the next level. But it's very difficult to try to put this out there and for you folks to believe it. So a lot of you have seen a lot of these things I've talked about over the course of time, and they come to fruition. That's what we're doing here. So just appreciate everybody watching. So let's back to work here. We've got to do the Russell, and I already saw Russell has completely flipped the script from yesterday, right? Let me go to the daily. They were down 2% yesterday, up 2% today. So the spread, even though I'm going to show you the spread. Even though this has happened, the spread is in big trouble. And I mentioned this. We've seen these kind of flips before, but this is just market flow money, day-to-day market flow, and that's okay. We are actually in a process right now. If we stay where we are at the moment at 22.32, we're going to get an RXT sell signal. So we saw 2% down, 2% up. We're basically are on this treadmill. And as we look at things, we are at least seeing the PPM starting to turn up here, which is encouraging that this thing is going to start to kick in. So we'll go to the spread next, but we'll run through the gamut. I just want to go quickly over to the weekly. Weekly, we're going to see something very interesting. The 10-week moving average 22.51. The high today is 22.32. So 22.51 is reasonable resistance. We have PPM1 at a minus 0.25, which is trend level down. And so I mentioned this, I believe, in last week, but this 10-period moving average has been somewhat of a demand line. It is now a supply line. So there's going to be a fair amount of resistance in these stocks in this indice right at this level. And we're likely to stay between 2154, 2251. So there's about a 100-point range we should consolidate in. The PPMs on a weekly basis are not even acting like they want to turn up. In fact, it looks to me that we could still see a move down below the 2154 level. Yeah, that's funny, Stephen. I started to mention Harry Dent. That's the guy. If you'd have faded him for the last 6 years, you'd be a very wealthy guy. So this pattern should stay intact here. I don't see us running away. This is not a runaway market. In fact, we went from what looked like a dragon head formation to a possible alligator. I'm teasing you folks. One day I'll tell you what those all of that means. But as we look at the monthly is setting up this giant consolidation range. I remember talking about this in last week's live stream. I think this is also important to understand that we are in this monster sideways range on the Russell. This is just going to be a lot of noise up here. It looks like ultimately it will continue higher, but we're looking at least another 4 to 6 weeks of junk here. So all the way probably into June before we'll start to see any potential. And I think it's going to run beyond that. It's probably going to be into September, October before we see anything interesting at all there. So let's go to the spread. Let's take a look at that spread. So I remember last week we were right about here on the spread. I said the spread's still in trouble. We actually upticked. I think this was last Wednesday, almost the same scenario. This has some potential of starting to set up a low. We're starting to see things start to bottom out a little here. So we could see some clawback on this spread a little bit, but it's still in the point where it's going to have to consolidate for a number of months, and that's exactly what the Russell chart's telling us on a monthly basis. So I like, when I do this analysis, I just so you know, when I'm doing this analysis, this is it's not premeditated, right? It's this is all on the fly here. Let me just I'm trying to find something here. Okay, so let's move on. Let's go to interest rates, the dollar, and then we'll get into the coins and some other stuff. Yeah, so somebody said the Dodge, here it is, 30.99 right now. This is the last trade here, and it's somewhat interesting. I think we're setting up a low here. I still think we'll see 42 plus on Dodge. So just a quick comment on Dodge there. If we go to a weekly, you could see this thing is really starting to bottom out here. I know that the big squeeze didn't happen. I think part of the issue is that the GME situation, there was more substance to GME than a lot of people gave credit to. Let me just put that out there. And when you get into a market like this, it's a much different scenario from that standpoint. So don't be too easily fooled that the crowd can manipulate the markets. It's the GME situation was very special, and there were some others as well. So, all right, so let's I do want to bring something up that I bring up all the time, and I want to go to our database here. In fact, let me just go. Let me zoom in on this. This will be easier to do, and this will tie down all of the equity stuff, by the way. So we bring in this right here. We're at 40.96 on the database, and we have 16,423 symbols that we're tracking. And this suggests that's a big database, and this includes mutual funds, and bond funds, equity funds, all funds, ETFs, and equities. There's probably about 6,800 of these symbols are probably individual equities, but we're looking at 40% of those being a long right now. We were at 44%. The magical number in this database I talk about all the time is 42%. So when we get above 42%, typically we'll get more traction from there. We'll have to see if everything claws back that was going on. What we're seeing at this current level is a rotation of asset types. So what's going to come out of this situation is two things, and that's going to be the two things that will come out of this situation. We're seeing this rotation, And what we're trying to determine, or what the models are determining, are which symbols are going to actually get from an entry level trend. So what happens is our models recognize the probabilities for a trend to form, and then the trends have to form. And what's happening right now is we're getting indications of trends, and then it flops back out. I think I have the numbers right here. We had 1,645 actual sell signals last night. We had 512 buy. So we had a net 1,133 symbols come out of the database last night. So though what I'm talking about here, and this is something that you can't see if you don't have this tool, and this is the world that I've lived in for over almost 25 years now, from standpoint of having WaveTech and Portfolio Expert in my possession, which I developed, and I wasn't the programmer, I'm the architect of the software. But what it does is gives me the ability to watch all of these things, not just look at an S&P chart, but start to look at all the internal breadth of the market from trends. And it's been pretty phenomenal. You'll know that last June, I called a really nice top in the June low highs, and then the rotation back in. And all of that happened because of the rotation that I see on the short-term database. And then we started to see the intermediate database log start to ramp in. And this analysis is huge, you know. And I tell you guys, the sales pitch is it's $3.19 a month or a day to get this thing. So it's $100 a month, $97. But to have this stuff, be able to have all these signals, be able to build portfolios is insane. And I know I see folks that are doing that, and it's getting more difficult, just so you know. And I announced back in November that all of the easy money was done. It's going to be much harder going forward. And I would argue that a lot of the markets, what we're seeing now, it's somewhat it's almost like a letdown from where we were before, right? We're at this huge volatility and all these crazy days, 100-point ranges on the S&P, and now we're down into this more normal environment. And this is a much harder environment to trade in and to do things. Last year was like nothing anybody's ever seen. I've been doing this for 41 years, so never seen anything like it. Not the 87 crash, not 1980. 1982, 1981, 82, all the way into the 87 highs was a phenomenal period. And there was a lot of, I would call, easy money then to be made. And then, but this 2020 situation was insanity. And I think there's going to be some problems with investor psychology, primarily because of expectations because of 2020. It's going to take a little bit of time to kind of normalize expectations again and what's real. We lived on the basis if you could make, 7 to 8% compounded, that's all that was necessary. Even if, and last year, you were making 10%, 8% in a day, right? So the expectations have changed for right now. And what's happening is because of those expectations, many of you and all of us are feeling this kind of disappointment around trades and other things, which causes more emotion, which causes more mistakes and so forth. So that's why this database is so helpful, because it gets all the emotion out of the way, and we can actually monitor what's going on in a very large scale, looking at a large environment. Now, these are all, for the most part, domestic stocks. There are some ADRs in there, but this is why all of this stuff is really important. And I still believe that the easy money is gone. Okay, it's just not going to be easy. You see days like yesterday with UAL and the Boeing, and they're flopping back the other way as well today. But there was a lot of pressure on a lot of different segments of the markets. So let's go ahead and let's go in and dig into the Dower. Let's do interest rates first. I think that'll be better. And I want to start with just a quick daily. I mentioned this a couple of videos ago. We're waffling right below the moving averages on this thing. And what this is telling us, we're starting to see the PPMs turn back up, but they're still very negative. There's still some downward pressure on yields, but I think they're going, and I'll show you why. I think they're going to remain above around 150, 154 in that range is the bottom end. We're 157. So we're likely just to go sideways and stabilize right in here as far as that goes right now. Let's take a look at the weekly real quick. So the 10-week moving average right now is up at 0.238, ppm2 2.74, and ppm3 at 2.34. And these are really big numbers. This market is going to want to stay above that level. So this sets the expectation from looking at the daily and weekly from a 150, maybe 152 to around 160. We should remain in that range, possibly start to move back up toward the 170 level. And I talked about this on a couple of videos ago that I believe that 170 is going to be one of the important areas to watch. And as long as it's below that, it doesn't matter. And if the 10-year moved below 150, that would be significant. And I think that would ultimately be bullish on the markets. So we'll see how this all sets up. Let's go to monthly real quick just to get that perspective. We'll do a quick look at the yield curve and look at that. So the 40-period moving average, I talked about this for a while now, is currently at 188. That just last month that was at 190. So we're going down a couple basis points per week or per month. And so that's going to be 186, 184, 180 is going to be the trigger. So even if we got above 170, there's going to be fairly substantial resistance around the 180, 184 levels. So these things are going to cap out. The big number that would scare, I think, freak out everybody would be the 2% level, but that's not in play at the moment. The absolute biggest range, if we just look at the market grid here, this is where the biggest range. Let me bring that on screen so you can see that, and let me zoom in on it just so we can take a look at this. So when we look at from a market grid standpoint here, the R1 is 184. That's right, the levels that I was talking about. R2, this is monthly. R2 194, don't see that in play. And you can see that here's S2 154. Below that is 144. I think we stay levels I just talked about at that 150, 154 is going to be the bottom of the range. And yeah, I don't think, I say question, do you think the bond market might actually become bullish again? I don't see that in play for a while, actually. And I'm going to go through crude oil here right after I do the dollar. So I want to talk about that as well, because I think there's a lot of inflationary things going on in this market. So let's go back to full screen so you can see it. But you can see here that the 40-month moving average, we're going to be sandwiched in on that grid numbers, and that's going to be at 184, 154. That's going to be your big numbers. We come into next month, we do have some very positive ppm1. ppm2 is broken out, but it's going to start when we start next month. You're going to see this thing continue to probably turn up and get into a positive mode. Both the 21 and 10 period moving averages on a long-term basis or monthly are still very negative, but suggesting that we could trade down to the bottom end of the range 144, maybe 134. I just don't see it at the moment. And if I do see things start to lean that way, we'll talk about it at the time. So let's go to the Dow real quick. So we're going to do Dow, crude oil, then we'll do the cryptos. I talked about the Dow and yeah, I'm actually I just want to say something right here because there's something that I've talked about to you folks before, and what I've talked to you about is, you know, I mentioned the book Princes of the Yen. Well, my buddy Hugh Hendry did I guess we'll call him an interview on Real Vision, and I'm actually going to reach out to Richard to see if he'd like to come on. I'm actually working on potential for a couple more things. Let me know if you guys think that would be cool. I would love to have not necessarily a debate, but a open discussion about my theory that we are potentially in Japan 1984 and that we're about to, if the US dollar, and this goes with the dollar analysis I'm going to do in a minute, the US dollar remains reasonably stable with all the new dollars coming into the markets, that's not going to create a buying frenzy with dollars. And so a lot of folks are talking just the opposite, that there's going to be a big deflationary pressure. Of course, our good buddy Peter Schiff and those kind of jokers out there that are talking about that, you know, all of this stuff, and it's, you know, you want to fade somebody, there's another guy to fade Peter, although I do like he's just a perpetual bull on gold, so his opinions don't really matter there. He's just a perpetual bull. But but yeah, most of this stuff, what I'm telling you is that but let me know if you think that would be really, really cool to have. I think it'd be fun to do. I haven't done any of that kind of format. I'm looking at a couple other things. I'm trying to get Hugh to come on with me. I think it would be fun just to talk about stuff. Hugh and I talked, I don't know, probably about 4 weeks ago was the last time we talked, and we had a really interesting conversation. I think you guys would have enjoyed it. So anyway, I even was challenging him. He's like, huh, that's interesting. I didn't think, never thought of that. So it'd be fun to do. And anyway, yeah, isn't that funny? Japan 1984, or the book 1984, Japan 1984. But we're also potentially living the book 1984. We know that, right? Who said that? Yeah. Okay. Yeah, I think it would be cool. So anyway, let's go to the dollar, because just this is the premise of what I want to talk to you about. And when I talk about Japan 1984, probably 82, 84, is Japan expanded a monetary base. And they right now, in my opinion, are the model of what all the central banks are trying to emulate. The Bank of Japan led the way in this whole QE. They invented QE, and now we're on QE, you know, nuclear QE, and where all of the central banks are printing money like crazy right now. And you know, they want to create this giant bubble, so it's an interesting thing just talking about the Fed and central banks in general. But these are things that I think are happening. I know they're happening, and with the stimulus slash expenditures by the governments are all spending the money, so they're trying to sustain society and reshape society. The Great Reset, you folks know. I'll sound like old Biden. You guys know the deal, you know. Anyway, but the reality is this: is that this stuff is happening. The stimulus probably will happen, whether it's 2 trillion, how it gets spent, we don't even know, like I talked about earlier. So the reality is that we'll find out all these things. But if the dollar stays stable, this is my basic premise, and we'll go to the charts and unpack this a little bit more. But the dollar stays stable, it's going to create a lot of buying power. in trillions of dollars. Numbers, percentage growth in monetary base is off the map. And even though the lack of velocity in that, I said I was going to talk about that. I didn't really prepare for that talk. But even though the lack of velocity of money expansion isn't happening, that's for another reason. But this is actually even builds this case even more of what I'm talking about here. So let's go ahead and go back to the screens and let's look at the dollar. So the dollar has been drifting lower for about almost 3 weeks now, but let's go to the weekly chart because I think that's where the setup starts to happen. When we look at the dollar going back for the last several months, we're really seeing this long base period come in. We did get a cycle top that came in here, and this is most likely the bottoming pattern. I've been talking about getting back to the 200-week moving average. That number is right now 94, 97. I still think we're going to get up there over the next 2 weeks. We're seeing the PPM starting to turn up a little bit, and there's a nice upward slope. So this was similar to what happened in gold that I was talking about when I told you folks, if you see gold in the 16 handle, anything 1600 is a bargain. And this is the same thing here as we're down here in this 91 handle. A 90 anything on the dollar is a bargain. And so if I'm right about this and we start to move up and we get above this 200-week moving average, then that's when we'll start to see what I'll show you next here on the monthly graph. You see here, this is basically the pivot point right here at the 95.28, 95.12. We get above that, all of a sudden these upward projections start to come into play again, 100, 104, and 107. And we got up to close to those levels back right in the beginning of March of last year, right as the pandemic got really crazy there. We got that big outside bar, and then we drifted down. And I do believe that the Treasury will absolutely, or the fairy godmother herself, will actually defend the dollar at all purpose because they do not want the dollar to decline right now. And when I mentioned Richard Werner and my buddy Hugh Hendry, if you went back and watched their last July, they were telling you that the Fed was going to go negative interest rates, everything the opposite. If you look at my videos back in August of last year talking about interest rates, I was telling you the Fed wants the yield curve to steepen, and that is exactly what happens. And as I'm talking about that, let me just show that number. This is July of last year, and this is actually right here. This is a longer term chart. This goes way back to 2017, but this steepening started way back in July of 2018. I'm sorry, yeah, 2018, and then it really blew up right here where I have the cursor right now. It really blew up on 2/21, and March 3rd of last year is when the Fed announced they were going nuclear. They were going to add money, do whatever they want. They added, what, $2 trillion, almost $4 trillion ultimately to the markets, and we know the rest. You can see, but here's what happened. The yield curve expanded, and that's exactly, I think they're fairly satisfied at the current levels. I would like to see another 30, 40 basis points on this. We're at 1.46 right now. I would rather see this at 180 plus, not over 2, but somewhere up around that range. We could go as high as 225 on this. This is the 530 spread. This spread has been historically above 375. And you have to remember, I started in the markets when interest rates were on their way up to 20%. So I've watched the interest rates and the bonds go from 20% to 0. And so now what I believe we're starting right now is we're going to be in a cycle, and the only cycle I see in the debt markets is one where we're going to be in a cycle of higher yields for a while now after these depressed yields that we have. So if the bond market's allowed to do what it's doing, and I wish I could remember the name of this book. There was a great book that was written back in the 60s that I read, but it really all what bonds are supposed to be is a measurement of risk of getting repaid. That's why sovereign debt has always been like the top U.S. treasuries, and then as you go down corporate grades and different areas, you get to more risk means more yield. And what we've seen, there's such a zest for yield in this market that you're seeing a lot of folks not getting, they'll pay anything to get something, right? And so we've seen even some of these corporate yields get way out of whack relative to risk. So the cycle I see happening is that risk will start to become a part of the calculation again, and that will come in and we'll see multiple years of yield prices moving. So I don't see the bond market. Somebody asked a question earlier, is there going to be a bull in the bond? Sure, there'll be short-term bonds, but if we start to look at long-term, these patterns that are unfolding here are likely to be longer term in cycle, and they typically will last multiple years. I just talked about the one that I lived through was a 40-year cycle. It's not quite 40, it's probably about 35 when we first got to some extreme lows. But this is going to be an inverse of that, where there might be 10 or 15 years of yields having a much different role. They should have more of a normal role if the capitalist system is going to stay in place, if everything doesn't get blown up and everything runs on MMT, maybe they can put a different paradigm in there. But for right now, I'm going with the paradigm of what I would call almost like gravity, that these things will come into play and we'll start to see those things start to go on. So let's take a look, going back to the Dower here real quick. Let's go. This ultimate goal for me is probably back to 100 plus, maybe 104. That would be huge. And if that happens with all the money creation that's happened, that we'll talk about that when it happens. I don't like speculating too far off in the future, because I want to see certain things happen. Once I see some things happening, we can start to make some hypotheses about what it means. Until then, we're really just looking at speculation, waiting for certain triggers to happen. So we'll wait for that. Let's go to crude oil, because that's something I want to cover. And I'm going to back up. I'm going to go to the daily chart here, and it's been very stable around above $60, and we're really stabilized very nicely. And the 200, I remember talking about getting up to the 200-day moving average, which is now, we're well above it. That number now is 48.74. But let's go to the weekly, because this is going to be where we're going to see the beginnings of this trend. Now we're over the 200-week moving average. I remember last summer talking about some of these numbers. It's interesting. We did get some Fibonacci targets, 73, 53, $87. I think this little pattern that was created here, you can see where I'm flashing my cursor, those dots up there, those are telling us that is a valid pattern. I'm going to draw a couple things in, because this is what I was telling you just a little bit ago. I still think there is a major energy play here yet. This thing is not played out by any means. And let me go through at least how I'm looking at this thing. So let's take a look. I want to draw in a couple patterns and show you where some of these things came in from, and we'll unpack this. I want to spend a little time on this for sure. So this pattern here and these projections up here came from this pattern. And even though we went sideways and there's a bigger pattern unfolding, a lot of times what will happen with this indicator, this projection is probably still very valid. So that's at 73.53, 87.39. That we'll just stick with those numbers. The upper end number is $95, which would be back to $100 crude, which is a possibility. But these patterns that are unfolding here, we're still positive. I'll draw in some lines: 0.26, 1.30, 1.97 on a weekly trend, and it goes. I'm going to draw a bunch of lines here. If you watch my earlier analysis when we were talking about the S&P, this is so classic from Bob Kendall's view of the world, utilizing these PPMs, and this is huge. But I told you momentum precedes price. We've got all three trend triggers, and we are in this next phase of sustainability of this weekly trend. And these, it's a very slow trend, but what we're likely to see in this type of pattern, especially coming out of this here, is we'll start to accelerate up toward that 73 number, then ultimately up to the 87 level. And we should see this thing. And this isn't going to happen overnight. We're going to go to the monthly graph so we can talk about this further. But this is an absolute, do not miss this, okay? Keep a close eye. And one of the things that I think is going to happen here, this has everything to do with the reopening trade. And, you know, one thing I haven't heard anything about, I'm pretty sure you won't, is electric boats, okay? There's a lot of equipment, a lot of things that run on this planet that will continue to be driven by fossil fuels. And as much as, and we've already seen a lot of innovation. If you look at the efficiency of all energy burning vehicles, it's amazing what they've managed to come up with. And if there's some incentive for them to survive, they will figure out even more things from a technological viewpoint. Maybe you'll be able to go, 100 miles on a gallon of gas or 300 miles on a gallon of gas. Then electricity will be in big trouble then, for sure. But let's go to the monthly graph. I just want to make sure I unpack this. This is something I wanted to focus on today. So this is the chart that I'm looking at that I think is really huge. We still have couple things. We're trading above the 40-month moving average, but this pattern is likely to move up toward ultimately the 200-month moving average, and that is at 109. It's coming down slightly, but this is where I'm talking about. We're looking at almost a double in crude oil from here, not quite, but what's happening is we're seeing that beginnings. Let me show you here. This is to me, this is very exciting because I'm always looking for the flows of things, and it's too easy to buy into the rhetoric and the crap that you read on the internet and these websites like CNBC and Market Watch and all these guys. They're just facilitating noise, right? So sometimes there's some pretty good analysis on there, but the mainstream media is not going to be talking about some of the things that I'm talking about here, but it's evident on the chart. So I've talked about this for years, doing reverse fundamentals. So the charts are telling me we're going to 100, potentially 87. We'll go with that middle number, right? And if that's the case, what's going to cause that? So what is going to cause it? The economies are going to come back on. I think these supply chains, all kinds of things are still going to stay really backed up. I think, our good friend Ray Dalio is talking about, of course, there will be pin-up demand, and that's how he's trying to justify how wrong he's been, right? Well, there's pin-up demand, of course, that's going to happen. Well, this is going to go beyond pin-up demand. I think we're going to see a lot of things that are going to happen here in the expansion of the world in general. I'm always been an optimist. I remain an optimist. I guess it's how I'll go to my grave ultimately. Because what I see here is this thing is going to expand. The charts are telling us that this is going to expand, whether it's $73 a barrel or if it's $87 or it's 109. This chart is telling us something. So let me draw a couple of things in and I'll get off this little rant. I always think I'm not going to get on a rant, and I always do. So that's kind of interesting. So this is the thing I was talking about. Momentum proceeds. We're just going to draw this like this. Momentum precedes price. So we're getting the momentum spikes here. And the interesting thing is these two indicators I just drew an arrow to are still negative. They will continue to expand substantially and get into a positive zone. They're minus 0.55, minus 0.23. What that means is that the 21 week, the 40 week, and ultimately the 10, they'll get lined like this, and you will have an uptrend into this mode going toward the numbers I just talked about. And this is fairly easy to expect from the way that things are configured here. And so I guess you guys being my army, I want you to start looking at some ideas and companies and things that we might be able to play into on an oil play. And I've actually got an interesting oil play just with some simple ETFs. I think I can show you. I'll bring WaveTech back up in a minute here. But this is a big thing to pay attention to. We could go and talk about me covering a bunch of individual stocks and stuff that you guys are interested in. But this is the big picture for me as far as what's going on in the markets. And this is going to continue to evolve. And you know, I kind of get tired of the focus on everything right now because of the new administration. Everything's going to be green, and if it's not green, then it's not going to happen. That's bullshit. It is going to happen. That this, like I said, these things are going to continue to be very active as far as things go, and it's sort of interesting. I have this new camera, and it sees my hand motions and it's trying to do something. So if it does anything weird, it's because I'm waving my arms around. Anyway, so you guys get the story. You understand the concepts of what I'm talking about here. So let's go on and let's do gold, because also in play here is something I think is going to be another play. So at risk of sounding like Peter Schiff, I am very bullish on gold. You guys have been hearing this for literally months, that I thought we were setting up the end of the pattern that's going on. The dailies we actually printed up. I mentioned last night we might actually get close to the 1800 handle. Today we actually got to 1798. I believe this market grid, when we get updated after the close today, will actually turn higher and we'll start to move toward the goals that I put out last night in the video, are 1868, which was the 200-day moving average. We're heading there, and I think we could get there fairly quick. There's a couple of things I want to show you on a weekly chart that I think is important. A lot of folks wonder why I cover gold like I do. I've been trading gold since 1980, 1980, I would say, and I ran a pretty good sized gold desk for a while back in the late 80s, early 90s. We did miners, hedgers, users of metal. So we did a lot of metal hedging with commercial interest, and so that's probably where my love for the metals come in. And I know a lot of folks are probably start screaming silver because that was in play. Silver has an interesting look as well, and it's having a pretty big day today. And I know I saw some folks talking a little bit about the miners and gold versus silver, all those kind of things. but yeah, so what we're looking at here, and this is something I've talked about in detail on the channel, is and on my daily videos, is the medium average right now on a weekly gold is 1803. The ppms are all turning up. I mean, I just can't even tell you how bullish this is. And we've got, I mentioned we had, I'm going to back up just for a second here. I mentioned we had a cycle come in yesterday, which should have been a cycle low. It looks like it is. We're getting some nice action out of here. We're going to need a confirmation, like I said, on a daily chart here. I'm expecting to see this thing turn back up and definitely move much higher in the pattern, at least to that 1868 level for right now. Let's go back, and now let's go to a monthly graph and look at the bigger picture. This is where things get a little more difficult for gold, and that if we do get up to that 1868 level, that's going to put us back to the 10-month moving average, and that's going to be a resistance point. And ultimately, we still have, on a longer term basis, we still have a lot of work to do. So everything I was talking about going back several weeks ago, buy under 1600. Anything that had a 1600 handle was a bargain. Then now I've been talking about 1800 going to 1800. We're basically went there today. Now 1860. Once we get to 1860, things are going to slow down a little bit from the movement. We'll probably get a large, broad trading range. Probably if we get to 1860, probably 1800 to 1860, probably down into 17 handles, 1790. We'll figure out the numbers when we can see the technicals and if we reach these numbers. But it looks to me that we're going to see this thing continue to move up. If we look at the market grid for this month, the 1783 was the R2, 1819 is R3. I don't think we'll see that, but we do have another week, so that's possible that we get up into that 1819 level. So yeah, that should be interesting. Okay. Yeah, I think it's going to get interesting around here. Sorry about that. I think it's going to get interesting around here. In my office building here, they are building a giant truck stop right behind us. So I'm just hoping that it doesn't get so noisy that we can't even do live streams here. I'm actually looking for a potential new office. And so I'm trying to get ahead of the curve here because it's not pretty. I mean, it's a big truck stop. They're going to be idling right behind this building here. So it's going to be interesting. So if you hear any weird noises, they've got some big equipment they're bringing in this morning. So just be prepared. All right, so let's go and let's see. We've done gold now. Let's go ahead and let's go to Bitcoin right now. We'll talk about the cryptos. So since we printed above the 60,000 handle, we've seen some steady pullbacks, but we're starting to see some stabilization here. And I think what is likely to happen is if we can get back above the 59,500 level, we'll start to see some upward movement, but there's really nothing going on here. On the weekly charts are about the only place we're going to see exactly what is going on a bigger scheme. I talked about this pattern. We've been actually locked in this pattern for a while. We're now actually challenging the 10-week moving average. PPM is still positive, but turning down. You can see that PPM1 is plummeting here, and all the PPMs are rolling over. So what this tells us is there's not a lot of upside. This little print that we got up the other day, what was that high? We got to 64,458. And we got down to 54, so we saw a nice little, only a $10,000 sell-off. And this is likely to set the tone. This is actually a dragon head formation, which ultimately will resolve itself into new highs, but it's going to be a while, it looks like, especially with these PPMs starting to roll over. We're just really not getting the type of action. We're really not getting the type of action that would suggest that we're just going to be running off. And I suspect this is the case with all of these cryptos. We'll go to let's go ahead and take a look at Ether. Actually got a RXT sell last week, and so that is a definite signal that we're going to see some sideways. So Ether's got a little stronger viewpoint here, but PPMs are fading, very similar. They're still very robust. So that 10-period moving average, 1864 on Ether, is going to be a pretty strong support. Okay, yeah. So I'm now standing up. So it's getting get tired of sitting down for a couple hours. But yeah, what I'm going to let's take a look at let's go ahead and take a look at Litecoin, and just to see exactly what's going on there. Same situation. We got that weekly RTX sell signal, and that absolutely has set the tone for this sideways movement. And I think these cryptos are done for a while. For a number of weeks, they're going to grind out, probably have some lower prices into these moving averages. You folks know I use like a 10, 21, 40 period moving averages, simple averages. You can see they're on the screen right now. This is really all you got at the moment from that standpoint. So what time is it getting to be? Let's it is what time? Half past. So yeah, Mr. Tater. Yeah, hang on, let me get my microphone back in here. I'm setting back down. Yeah, I understand the truck drivers. Matter of fact, the Jay was an 18-wheeler himself, so I know all about those kind of guys. Anyway, let's do a couple stocks. I think I got most of what I wanted to get out on the stream today, as far as getting some perspective of what's going on in the markets. But yeah, I don't have Darren. I'm sorry. I have a limited access to the cryptos on this platform, unfortunately. Yeah. So let's do It is about 30 minutes to close, a little bit less. And yeah, I know some folks seem to think I'm a Kathy Wood troll, and I'm really not. But her funds aren't looking good. Um, her concentration, yeah, I mean, you got 10 period moving average down 2.74. You traded right to resistance, right back to resistance. It looks like we want to at least challenge 113 on ARKK. And and the reason why I'm bringing that up is because as ARKK goes, usually so does Tesla. So let's go to Tesla. That's basically all ARKK is Tesla. The volatility on the ARK strategies are about 3 times that of the NASDAQ, actually. And I've warned people to be very careful with these funds. They're not very well constructed, and the concentration equals lots of risk and lots of volatility. So be careful with these things. Let's go to Tesla. Now, Tesla's trying to climb through some of its moving averages, but we still have this negative pattern. I think that Tesla will probably stay within the grid, but actually could turn back down, maybe head toward, I would predict maybe around 600 again. We're probably going to see 600, maybe 580 potential. There is some new high objectives on Tesla. So we're looking at a high target of 1,000, 1,200. Not sure these are going to come into play, but if we stay above the 10 and 21 period moving averages for at least 2 weeks, then the 580, 600 number goes away, and we'll see these PPM start to turn up. So it's kind of different. This is a weekly chart that we're looking at on that. So yeah, I brought up this, what is it, HGEN, HGEN, weekly. Not a lot here. This thing is just sideways. Couldn't really, it's really locked in this pattern here. The range, I would just put up the market grid for you. The market grid is this $8.94 to $20. So you got a fair amount of volatility, but probably S1 is what's hit so far. Basically S1, not quite an R1, but it's going to stay around these moving averages right now, 1690, 1539. That's where it wants to go to. If we can get above those numbers, maybe you can get back up to the upper part of the grid. But looks like there's a lot of stock ahead of this. Yeah, let's take a look at some of these energy stocks. So yeah, this is actually good. Here's BP. This is a good one to take a look at. And this looks like, surprisingly enough, the weekly crude chart, right? Which it should. There are objectives right now for us to go to the 200-week moving average and beyond, but the 200-week moving average right now is 3502. So there's some decent upside here. PPMs are all positive. This actually, I would say this is a perfect play with the crude. I did bringing up GME. Just going to go through a few of these, then we'll go and talk about the close on the. Yeah, it's interesting. We're probably going to get an RTXL on the indices today, on the S&P anyway. So let's. But anyway, as we look at GME, this thing is still consolidating. I was talking about these big objectives last week, potential of going up to these numbers 426. Those have been moderated now, and this happens a lot. Now the upward projections, they still look pretty decent. We're looking at the potential of 234 to 234, 273 to 297. That's probably a more realistic target on this thing. And as I've said, there's a lot of skepticism around GME. There's still some idiot running around saying he still believes it's a $30 stock, you know, and those are the kind of guys that CNBC have come up. I saw what do they call it, the fast traders or whatever they are one day, many weeks ago. I watched a clip or something from those guys, and they were all laughing at GME and laughing at what a joke the CEO and the CFO and all those guys are. Now they've restructured the debt on the company. They've done a secondary offering. CEOs stepping down, and they're restructuring this company. Whether it will end up doing something or not, there's certainly these numbers I'm talking about are a possibility. And the Roaring Kitty rules because he looked at this thing from a fundamental viewpoint. And I was talking to somebody just the other day. I've moderated some of my views back in the day when just to talk about the GME and the whole Robinhood and everything. I was really impressed when all of these folks got in front of the Congress. It's really interesting when you put really smart people in front of Congress. You realize how stupid these senators are, and some of the stupidest questions that I've ever seen. Everybody that was on that hearing that day were very articulate, smart, and well trained on how to handle the hearing. They spent a lot of time with their attorneys, which is a good thing. But the thing I was really impressed with the presentation that the Roaring Kitty made, and then also Vlad. I was very impressed with Vlad and how he handled this situation and how he continues to handle the situation. So I was ready to write Robinhood off. These are the kind of challenges when you're in business that you have to step up to. So the point is, GME is probably not over. This company is trying to restructure itself. It's already done that, actually. Now it's trying to figure out what it's going to do when it grows up, and whether it's going to be, you know, streaming, gaming, or whatever it is. There's still some upside in this thing. So it's been moderated from these objectives that I talked about a couple of weeks ago. It's definitely been moderated from that standpoint. So we're looking at minimum objective here. And I've told folks, if you're a WaveTech user, you can probably play a 1.2, maybe a 3.2 model on this thing and do that trade, because at least you want to look at these targets here and see if there's a new trend to evolve. As far as the trending goes on this, there's not a lot here, and it gets way too noisy when we go out to a weekly chart. You see all the crazy noise that's in here, but we do have the weekly 10-week moving average 158. It's at a ppm of 711. So from a pure structural viewpoint, from a pure technical viewpoint, this thing has got substantial support here at 158, and it looks like to me it will most likely stay above that. If we get above the one, I believe it's 163 is going to be what R1. So if we get above that number, we should see it move up. We've had an R2 for this week. 173.84 is R2, high 175.20. So we exceeded that. On the downside, we came just short of an S1. But I suspect that if this thing closes above 158 on Friday, we're 157.94, that we'll see the grid turn up, and we'll start to see some bias to the upside. Yeah, I mean, I just saw Jonathan Klein. Yeah, exactly. See, they got a second life by all the short squeeze, and now that this thing is stabilizing here at 158, it was $4 a share. Let's take a look at this. What was it? Just last May, it was $4 and $5 a share. So now we're looking at 158. We're looking at a 10 to 14 billion-dollar company. You restructure, you get what would you call him, stinky someone. Yeah, get rid of that guy, and now you get an opportunity to do some exciting things because it's like a startup company all of a sudden. So they're definitely worthy of watching. I know that's pretty long-winded on that, but there's so much around this company. So DraftKings, I think, got a lot of traction last year, coming back and sports being played and all that. So we're seeing this thing continue. Not a real nice pattern. PPMs are positive, but they're starting to lose momentum. So probably a sandwich job between the 21, 58, 10, and 63 is about all you can expect out of this one right now. Alex, you did miss it, so you'll have to watch on the replay on Tesla. Okay. A lot of these companies I don't know. FUBO maybe is bottoming here, 200-week moving average. Doesn't look exciting. Lots of downward pressure. We're looking at PPMs and major downtrend. I'd say let this thing bounce around down here. Don't try to get cute and own it. Doesn't look like there'd be any reason to do that. AMAT is in a pretty good upward. Only thing that's happening here is PPMs are starting to roll over. So this is what I call a dragon head formation. Suggests that once this pattern completes, probably have another 2 or 3 weeks, and we have to stay above the 10-period moving average 125 on a weekly basis, and we stay above that level, then we should see this thing resume and still have more move to the upside. This is my pick, AMD. This I hadn't looked at this for a while, but PPMs are negative. This thing's not going anywhere. This was a high player versus the Intel, and yeah, Intel actually has come back in. And if you were playing a spread between Intel and AMD, that was a big turnaround going back to December. So Intel now has the better outlook than AMD does, and even with their Ryzen chips, they're not getting the same traction. They're just so hard to go against these mega guys. I never told you a story, but back in the day when I was on a Pacific Options Exchange, AMD, we used to trade AMD, and they were always, Intel sued them all the time just to try to put them out of business. And it was just frivolous lawsuits, and the stock would go from about $22 to $12. And as soon as it went to 12, we'd start playing and putting positions for it to go back to 20 plus, and it would just oscillate back and forth, lawsuit to lawsuit. So they still have this rival thing going on, and AMD survived all the lawsuits in the early days. This is the 1990s we're talking about, and they survived, and they've really become a world-class chip company, and they were they were then. Actually, they just were being constantly sued because that was how Intel was a very predator type based company. Not nice people there against their competition. They had more money, so they attacked. It was an interesting thing to watch. Okay, let's see what else you guys are looking at. So yeah, here's CCIV, Churchill Cap Corp. Don't know much about it. Looks like IPO or something came out. Got the hype and back to it. Not too much there. I don't even have enough data to run any indicators on them. Something I haven't looked at for a few days, but Coinbase is back at 312, so you had the big day and it's just going to shrink. I suspect that this stock will come back into around 250. It's a guess. There's no technicals here to really go off of this, but this spike that we had on the day of the offering that went up to 429, that is a level that will probably live for a while as the high of the stock. We'll see what plays out, but I would suspect this thing, probably original projected valuations of coin was around 250. I think we're going to head there. I don't think anyone sees the valuation. I think it was way overplayed. And in fact, you could almost mark, for the most part, the high in the cryptos to this offering. And this was also the offering that kind of triggered some of the selling that we saw in the markets. What time we got? 48. So let's do a couple more. So Pfizer is trading RXT on a daily. Let's go to a weekly. And I got there's actually some objectives here for Pfizer, 45, 47, 49. For whatever, I'll just say it. They're already telling you you're going to need a third shot of COVID a year out. So maybe that's what's starting to be priced in. They figure the government's going to keep buying this stuff from them. And so we'll see how that's going. I don't know the exact number, but I think like the last time I saw, maybe 50% of the population is actually vaccinated, but they're going to need multiple shots. A lot of folks have had one shot and they don't seem to be excited going back for two. Let's take a look at some of these just real quick. Yeah, we haven't looked at this. We should. Netflix. Netflix is going to potentially get an STX buy signal if we stay below 518 on Friday. Let's look at a short-term basis here. I suspect we've blown through. No. We're down 762, so it's recovered a little bit from its overnight. PPM's all rolling over. This thing has been stuck for a while. We got an RXT sell way back on 120. There were a lot, if you recall, there were a lot of these RXT sells that came in on 120, and that has definitely been a point where we've seen a lot of stocks just go into sideways mode. It's also the point where we saw the reset of our daily models where we went from around 70% bullish down to about 16, 17% before we moved back into the 40 handles, 40 range, 40% bullish. So we got 10 more minutes. Let's take a look at QCOM setting on the 200-day moving average. Negative PPMs, not a lot there. Trying to maybe set up a bottom. I'd watch the 200-day moving average and just see exactly what sets up. Let's look at a weekly. Yeah, that's going to be the 40-day or 40-week. 0.82. Yeah, there's solid support here. 133 is big time support. Probably a sandwich between 135, 144 on this stock. It's going to take a little bit of time to actually work through this consolidation down here after this move up. So we'll see how that sets up there. So let's look at Exxon, very similar to when we looked at the crude oil. Once again, probably 200. This is weekly. 200 week moving average is target 66.95. So there's some decent numbers there. That's 20% move in this stock. So, and ultimately, if I'm right on the crude oil that I talked about, then you're looking at something much greater than 70. You're probably looking at 80, 85. There's no projections at the moment. Even if we look at be interesting to look at this chart. Yeah, monthly graph, there's 75 is the 200 month. So that would most likely play into that crude oil scenario that I talked about a few minutes ago. Okay. Let's take a quick glance over at the futures and just see how they're trading as we're coming in. Still trading up at the higher end of the day. Want to go over to the daily on SPX. As I mentioned, if we stay above 41.65 on the close, looks pretty probable at this stage, we're going to get an RTX sell. So we go from an STX buy to an RTX sell, so we should come in. But the positive is that we're back above that 10-period moving average. It's back up at 0.22. Last night it was 0.14, so we're just about back at trend level. And so this is a positive sign. We'll see the market grid turn up tomorrow. There's some things going on there that will keep this thing going. As far as the weekly chart goes, we're in the middle of the range. We won't be frothy on a weekly basis till we get above 42.05, and that would be an all-time new high, which is no big deal. Another day like today, and we've got that. All right, let's go back to the level 2 chart. This will be interesting. We still have about 6 minutes, so I'll go back and let's do a couple more symbols here. Yeah, CAT will be good. I did XOM just a minute ago. CAT is consolidating up here. Get some great PPMs. The trajectory 10-week moving average 225. That's going to be your solid support. So we're going to see CAT go sideways and ultimately resolve itself to the upside. There's no current Fibonacci projections or anything on there, but this is obviously the infrastructure play. They're going to end up with a shortage of material, of machinery that they can make, I would suspect. And what will ultimately happen then is, I believe they've already increased their prices, and there'll be more increases, and we're going to see prices continue to increase across the board without a doubt. Just while we're looking at this, I'm going to bring up very quickly what time we got 5 minutes. I'll look at the weekly lumber chart. Lumber has printed up to the 1,000 level on this nearest futures chart. And the reason why this thing looks funny in the back, there's negative numbers on because this is a futures chart and there's some backwardation on it. So it messes up the longer term charts when you go back that far. But this pattern is just very bullish. We did get an RXT sell signal, so we're likely to get 2 or 3 weeks of sideways on lumber, but it just tells you the demand, everything that we saw from the real estate market is real and is going to continue. There's just craziness going on in real estate. Yeah, let's do NEO. NEO's hanging around its 200-week moving average. I'm sorry, 40-week moving average. 36.71 is the support level. The problem is you've got a monster downside on PPM1 at 4.79. It's at 41.67, so you're going to have a tough time getting above that. I suspect that we could see some lower prices, maybe down into, let's see if there's anything on the daily chart to look at. We got about 2.5 minutes to go in the market, so we'll go over and watch it close here in just a minute. Yeah, so good news on NEO on daily is starting to turn up. PPM's all turning up, so that just tells you that 40-week moving average is going to be solid support. Number I just said, 36, whatever that number was. We get above the 40-day at 40.54, then you can start to move in to some of these objectives. The other thing that's happening, there is a cycle low today. So that's interesting. We're up 5.25. So we got the signal for a cycle low yesterday. Here it is. It's there, and that's a good thing. So we could look at these values moving up into the targets 48.53 maybe on this thing. So. Tesla is, just somebody mentioned Tesla. I covered this before again, but I'll look at it again. We're right up RXT 747 on this one, 747.32, high 744. So we're just in between R3 RXT. PPMs are turning up, so you know there's a shot here for us to move up into these objectives, which high target 1, 769, 839. So this is a good sign. I mentioned earlier that there's some downside potential if we don't get above certain levels. So make sure you go back and watch the previous coverage on that. Let's see here. Herman, I come to the conclusion that his database doesn't cover small caps. We have 16,400 symbols. We cover everything. So, yeah, we have the entire market. we actually have even, I don't know, Jay might be able to tell us, we used to have like a small cap 600. We had all 600 symbols in the small cap index in a strategy. Not sure if that's still out there or not. But yeah, you've come to the wrong conclusion, Herman. Sorry. Anyway, let's go ahead and take a look at this close. It's already happened. I got distracted, so a little bit of selling on the close. Not a lot going on. Let's see what the actual print was on SPX. So like I said, we're going to get a RTX sell signal for sure. That's done. So we should see some sideways movement a couple of days, but there could be some follow through early on. Sometimes when we get these signals, they don't mean that the market's going to go down. It just means they go into a sideways range and they tend to move toward the S1, S2 levels on the next day. And that hasn't been calculated yet. As soon as they're calculated, that's what will happen there. So let's go ahead and Let's see if you guys have a couple more you want to cover, and we'll do a couple more and we'll call it quits. Yeah, Brian, I'm not sure. I guess you're talking year end. I'm not sure about that. What's Herman doing? Herman? All right, let's do, let's see what we got here. Yeah, so we'll take a look at STNG just for Herman. Yeah, I'll do about 3 more stocks, folks. It's what, 102 local time, 402 New York. Yeah, so nice 3% move. We're back above all the averages here. If we go to the weekly, we might be able to see something interesting on this one. Yeah, 10-week moving average is up at 1.19. I would say look for a move at least to the 23.30. Maybe there's more in this thing if we start to develop a more robust trend, but this thing is in a very, very strong uptrend. And we did have some cycles come in on the 26th of February, set up a little mini top. I don't think they're going to be significant in this pattern, but we will want to see these PPMs turn back up. But if we can stay above the 10-week moving average, simple 10-week moving average, 1792, that's about all you're going to have to do. Okay, let's see what we got out there. Yeah, so here's the blockchain, a high blockchain. This one is an absolute, you're going to look at ranges right now of this at, let me get this back on screen. You're going to be locked between the 10 and 21 period moving average, 382, 285. We're trading right pretty much in the, not quite in the middle, at the lower, excuse me, at the lower end. And we're looking at, as we look at the market grid for this thing on a weekly basis, what we'll see is low 290, that's S3. So we're probably satisfied this week, but this pattern is turning negative very quickly. And this is, we got this RXT sell signal back on 219, and we've been down really pretty much since, but we've entered into this giant volatility mode. So I believe we'll stay in this range for probably another couple of weeks. And that, look at this market grid, you may want to mark these numbers down. The extreme range is 269, 430 is going to be where that one's at. Yeah, Ford has been in play here lately, and we have seen a substantial amount of movement. We're at a plus 0.22, 0.15, 0.134 is the PPM 1, 2, and 3. So this is another one where you're going to be locked between 1102 and 1227, and you're going to need to stay above this grid. It's narrowing, which suggests that there's some more downside. So look to see if it holds 1102. I'm not sure what you're doing with that, but the PPMs are also rolling over, which means that we're likely to go into this basically a sideways range here. Okay, I'm going to do yeah, probably I would tell you that asking about comment on ES and SPX for the rest of this week. I will do that in tonight's video when I can get focused. I would definitely be talking about my expectations for that. So I'd watch the nightly videos for that. I don't, not in I have a worksheet that I go through every night for the commentary that is important. So, and I also like to just sit back, especially after a reversal day. So we had a reversal down followed by a reversal up, RTXL. There's a lot to look at as we come into this range. Was that Seeking Buddha? Thank you. I appreciate it. What did he say? Okay. All right, folks. I just want to thank everyone for coming and really trying to get some perspective here on the markets. I just really appreciate everybody coming. I really do. I hope that you guys go. And I'm curious. Man, I was so busy I didn't even have any Rona. If anyone's actually tried this stuff. So yeah, this is like 2 espressos, 150 megs of caffeine, but it's not like the caffeine. So make sure you try these things. They're awesome. Anyway, thanks again for watching. I'll be talking to you tonight in my daily commentary videos. And please make sure you subscribe and tell your friends. Let's build the community up. Thanks again for watching.